people that can't get on, and they can then, I'll just put it in the section where you can watch it back. So what I'll do is I'll share with you guys my screen, and then we'll go through everything. So you guys now should be able to see my chart on TradingView.
Yeah, we can see that.
Awesome. So as always, if there's any questions or anything and you don't want to kind of just shout out, or you feel like you're interrupting me, because I will just fucking waffle. I can't help it. It's just what I do. just put a comment in on the Zoom, guys, and I'll see it pop up. I've got the box open, so I'll see it come up, and then I'll just answer it when I see it. It won't put me off tangent or anything. It's all good. Okay, so for you guys that aren't aware, the way I learned was I pretty much took strategies, loads of strategies, well, loads, 3 or 4 strategies, and I've combined them into one that's kind of suits me. One of the most important things I've found with trading personally for me is quarter theory levels, and I learned quarter theory levels through a guy called Chance Gonham, who done a strategy called Pitchforks, and he done an educational video on quarter theory levels. And I don't think they're massively well known, but what they are really strong support and resistance levels within the market that the banks adhere to. So the way that it's actually traded is it's actually traded on a larger scale. So the actual quarter theory levels are actually over 1,000 pips, and then the quarters are at 250 pips for each quarter. When you're doing that kind of trading, you're going to be in trades for a fairly long time to get that move. I'm not really comfortable with that. I don't know about you guys, but when I'm in a trade, I can't help but look at my phone. It's just a mental thing I do. I won't feel anxious about it or anything like that. But if I'm in a long trade, I will look at my phone more than normal. So, and the whole point of you guys coming into this is to kind of get your time back and not look at your phone constantly or be at the computer constantly. So what we've done is I've used the same concept, but I've minimized the timing. And what I've done is I've worked a strategy that works alongside an indicator, which you'll see at the bottom here, the TQI, that you can use on, to be fair, most time frames. I use it mainly on the 15-minute. And then what I'm doing is I'm just going for these quarter levels. So each one of these lines on here, if I just remove these so you can see. So the way this works, and this is on NZD USD, if I go out to the 4 hour, and just to give you an idea of like how powerful it is. So without me touching anything, so I'll move this down. Without me touching anything, you can quite easily see that the banks move price to these levels, and they respect these levels massively. So it's very similar to the way I kind of explain it is if I'm meeting one of you guys at the pub and I'm like, John, let's go to the pub at 9 or 9:15 or 9:30 or 10:15. It's never like 5 minutes past 9 or 7 minutes past 9 or 23 minutes past 9. It's always those kind of main numbers, and it's very similar because with the banks, they follow strict guidelines, strict rules to price. You'll find that there's these psychological levels that are very, very strong. And what I'll do is I'll show you here, and I'll show you what they are. So the red lines on these are every 100 pips. So between each one of these is 100 pip move. The blue line is the 50 level. So that means it's halfway, but obviously halfway between the two. And then this first green level from the red line is your 25 level. And then the second one is your 75 level. So it goes up in 25. So this is your quarter. So rather than do it over 1,000 pips, we've minimized it to 100 pips. But what we're doing is, and the way that I use this is I'm kind of want to be in and out of trades. So what I'm doing is I'm trading between the quarters, and depending on the reactions off of these quarter theory levels, it will determine whether I stay in it or not. So what I'll do is I'll now add the TQI in, and then this is kind of where you can be a bit picky with trades. So 1 sec, let's make this bigger. There we go. So the way this works is if I go down to the 15-minute, just to give you an example, is I'm looking for reactions off of the quarter theory levels. And what I'm looking for is the main one I'm looking at is the green one. So the green one with the green arrow is the one that I will use to go off of. Ideally, these two blue lines are known as Bollinger Bands. So what I'm expecting price to do is once it comes out of those Bollinger Bands, it will then work its way back in, and then you're looking for the crossover of the green and the red, and then that's when if everything lines up, you get then the green ball. You'll notice that the green ball will show more than a few times, and not all trades are relevant, and this is the reason why we incorporate this. You can incorporate this with the other strategies you do, so you can incorporate this. I know some have put this into SS1, SS2, they've put it into bankers, into supply and demand, and that's the nice thing about quarter levels. They are a little bit different on indices, and obviously if you're trading crypto and stuff, the levels are different, but we're mainly with this going off of currency. So I only ever trade currency with core. I don't really do, I've never done it on SS1, SS2 or anything like that. I've had a couple of people message me saying they're trying it, but that is up to them. I haven't back tested it or anything. So what I'm going to do, sorry, I'm just going to mute you. If you want to ask questions, then unmute yourselves and please ask. But what I'm kind of going to show you is kind of what I'm looking for. So this one here is a really good one. So this is on the 15-minute, and you can see the reaction off of this quarter theory level here, and we can see here it's lined up really nicely. So what you're looking for is kind of like touches off of these quarter theory levels. So you can actually see here that we've had kind of like two kick in. So we've got this one here, which is kicked in here. So we can see that it's nipped the quarter theory level and it started turning around on itself. So what you would have seen at this point is you would have seen that the green, and I'll make this wider so you can see, you would see that the green coming back in on itself, ready to cross over on the red. So we'd be waiting for that. But then you've also got this one up here as well. So you can see here, there's a bit of consolidation in this area. And this is done your typical kind of bankers move where it's got consolidation. And then what it's done is it's taken liquidity. So you've got this high here. It's come down. It's caused some lows that haven't really taken each other out. They've been equal lows. And then what's happened is it's nipped liquidity in this little bit. And then we've had that reaction down, and it's then taken liquidity either side. So ideally, you want to be kind of trading this in like a trending market. Ideally, you'll get better results, especially if on a trending market, they're falling really nicely into mitigation areas and stuff like that. But this is a good scenario here, and this is kind of why you need to be picky with this. But you're looking for the reaction off of the quarter theory level, and then what you're doing then is you're just trading it level to level. You can be like, this one's gone through quite nicely, so it's up to you whether obviously you've gone through or not, but generally I will just do quarter to quarter, and then my stop losses are generally pretty tight. So in this scenario here, bearing in mind you've got spread as well, so spread on NZD/USD is roughly about a pip and a half, so you'd account for that in obviously your stop loss. So even on this main level here, even if you would have got in pretty much on the level, 5-6 pips would have been nice, so you could give it a bit of room to breathe, and then you'd be then taking it down to this quarter level here. Obviously this one went double that, but you'd be taking it down to there, and yeah, you've got a 3.5 to 1 on that, so 1 to 3.5. But if you can get a 1 to 2, 1 to 3, if the stop loss is tight enough, that's great. Depending on how you do it, you could do 1 to 1s as well and just play it really safe. But then it just comes down to your risk in that. I know there are some people that aren't happy risking 1%, and they just want to risk 0.5%, which is absolutely fine. And then in that case, that would have been 1.5% profit on that trade. And then obviously if I remove that, and then we've gone the opposite way with this, once again, it would have been very similar. Your entry could have been really tight on this, because you can see that it's struggled to break through. Sorry, I made that smaller. You can see it struggled to break through the quarter theory level. So I'll put that there. So you could add it 4 or 5 pips below just to cover the spread. And then eventually it's made its way back up there, and it's kind of technically made an equal high. Oh, it's actually broken through. Actually, it's gone all the way back up. Sorry, it's to here. So, and even then, that's, yeah, you're looking at like a 1 to 5 on that with a really tight stop loss. So it's a great strategy. I've passed quite a few funded accounts using quarter theory, and I incorporate quarter theory into everything I do, and it gets to the point where you kind of won't need to have the lines on because you'll just know the levels, and you, as soon as you know this, it's kind of, you'll see it all the time. And even on stuff that you haven't got marked up, you'll see, oh, there's a reaction off of quarter theory level there, and it's kind of, it's once you know, it's kind of really nice. So this is how I do that. So what I'm doing, you can, like I said, you can apply this to, like, if you guys are doing supply and demand and stuff like that, or you're doing bankers, any kind of reactions off of these main levels is perfect. And then there's a couple of ways you can do it. You can either do it in consolidation areas where price is moving around 50 pips in a range, and you can just go, because you're only going from a quarter to a quarter, you can technically trade the consolidation. Or, which I would probably recommend the most, is kind of just trade with the trend, and you just wait for those pullbacks up to the quarter theory levels, and then a reaction off of that ideally, and then everything's lining up with this. If you guys have got a trading plan, which ideally you should have, what you can do is you could add an EMA onto this. If we go to, I'm just trying to think, when I was doing pitchforks, there's a really good, I'm sure it's, I'm trying to think now if it's an EMA or SMA. I think it's, I'll have to amend it. Moving average, I think I'll put 2 on. So there's a, this is, now we're going down like the kind of pitchforks kind of route. If I go to, so one of them is 62, and then the other one is 930. And what that is, and Justin will go over this as well, is there's 15 62s that go into 930, if I remember that right. And that's what they use on pitchforks. It's either 910, 930. Pretty confident it's, let me just double check, because it's been a while since I've added these indicators on.
I think Justin uses the harmonic pitchfork indicator, which has
yeah,
the on it already.
Yeah, that's it. There is one on here. Yeah, what I'll do is I'll take this off and I'll use the harmonic pitchfork one. Here we go. Yeah, Brian, there we go. It's got him set on there. So yeah, it's already got these built in. And then the way that you can add this in as an extra confirmation is you're waiting for that crossover. So you're waiting for the crossover on like a downtrend or an uptrend, like you get a nice reaction here. So it's just then a case of going on to larger time frames to see the direction. So if I make this smaller, yeah, it's kind of overlapping a little bit on my, let me just take that off. So it's a little, yeah, it's not as wide as my one, but I had it amended so that it covered 1,000 pips, because the harmonic one only covers about 200, I think 250. But yeah, ideally what you want to do is kind of see a trend. You can see on here that this is kind of broken structure now. It's taken that, it's done a liquidity grab here, and it wouldn't surprise me if it kind of pulls down a little bit before potentially going higher. So depending on how you wanted to play it, you can see on the 1 hour we're about to get that crossover. So there's going to be a likely push up, but we don't know if we're there yet on the, yeah, we don't know if we're there yet on the 15. We'll just have to see what it does. But it's quite simple, guys. Like I said, I use this with mainly smart money when I'm doing it. I'll kind of wait for those key levels. If I decide to use the TQI at the bottom, then I'll just use that by itself, and I won't really incorporate anything else into it. I'll just kind of look at equal highs, equal lows, and stuff like that. So I'll trade when it ranges, like here. You can see this range here. and I'll take advantage of that on the smaller time frames and look to just go in between the quarters. Is there any questions from you guys? No questions. Everyone's
No, I
happy?
can't think of anything.
No, it's all right. It's fine. If there's no questions, there's no questions. With the guys in the trial group, if you've got any questions, then you can ask as well. I've got that open, so it's all good. I was looking at NZD earlier, NZD USD, so this one earlier, just simply because we've had a liquidity grab here. I'll just move these. I was looking for a potential sell on this because you see what I see here, like just the lovely reaction off of this quarter theory level, and then it's just gone down. And this is the thing. This is the reason why I go for the quarters and I don't go for those like massive long moves, because the massive long moves obviously do happen, but when you're trading quarters, they're a lot more. It's a lot more likely for you to get 1 or 2 trades a day if you wanted to trade that much on just using quarter theories, just using the quarter theory levels. The TFT, is that a free indicator on TradingView? Yes, mate. So both these. So this one, if I turn this off and I put this one back on, so this indicator here is TFT zone, and this one is as well. So if I quickly go to Discord, so it is, I got Cole to add it, so it should be in the indicator section. So look, indicators. Here you go. I'm being blind. Indicator request form. Here we go. Yeah, so here we go. So they're the TQI and the TCQ. So as normal, you just fill those out, and then what will happen is once you fill them out, you may need to log out and log back in, then go to your indicators and go to invite only scripts, and they'll be in there. And then obviously you can just favorite them, and then they'll just stay in your favorites, so they're easy to get. So you can apply for them whenever you want. Has anyone got any questions about anything like trading in general? Are you guys struggling with anything? How are you getting on?
Is there any way, like, obviously there's going to be times where it reacts where you don't take a trade? Like, how do you know? I know obviously you probably know already when to take one and when not to, but is there any advice you can give us on when you wouldn't? You know, like, do you have to wait for it to react twice off the quarter theory level, like a retest, or?
No, so I would generally add other confirmations in. So if you're covering bankers, smart money, or supply and demand areas, stuff like that, then that's perfect, because you can just add it. This is just like an extra tool to the belt. If I'm doing consolidation areas, then generally, as we know, what the banks do is they'll create liquidity or consolidation for liquidity, and then liquidity is taken and then they move on, right? So this scenario here, for instance, where it's working in, we can kind of see this is a very common move where it's working within this channel, liquidity is taken both sides, and then it goes off, and this happens a lot. So if I was just working the channels, and you can kind of see when it's kind of just sitting around a channel, because what will happen generally is you get like a decent move, it will consolidate for a little while, and then it will make another move either up or down. It's just a case then I like to see nice reaction. So what you can do is you can go down to the 1 minute, and you can see, if you notice that price is really struggling to get through these levels, then you can look at the larger picture, like the larger time frames, and kind of see the reason why it's doing it. Because there's the reason that price struggles to get through levels, or it goes to other levels, is there's reasons always behind it. It's not just random. So what you can do is you can look back, and maybe it's hit an order block or fair value gap or something like that, and it's kind of at that point it's looking to maybe turn. So you can just add it to kind of what you already know, and it's just a case then of what I like to see is I like to see a really kind of clean move off of the level. The issue with the 1 minute is you're going to get it a lot, but what you will find is it works really nicely off of equal highs and equal lows. So if it's working in like a certain area, like here for instance, where are you? So you can see here we've got this, it's come up, reacted, and then come up, and then we can see here how it's kind of come back down and tested that level and then gone. I don't know if this would be, yeah, you can see here how it's kind of really struggling. So you can follow it off of the quarter theory levels, but depending on your experience, you may just see stuff and kind of just put it on because it just looks good. The thing is with trading, as you guys know, is I can look at this and I'll see something totally different to what you guys see. So this is why it's important when you guys join TFT that you get on Matt's sessions, Connor's, David's, Reb's, and you get on everyone's sessions and you take a snippet of what they see and what they teach, and then eventually you don't necessarily make your own strategy, but what you do is you kind of see a strategy for yourself, and you'll take snippets from everyone's and then see stuff for yourself and decide then, because we could all get into the same trade, and if we didn't speak to each other, every single result would be different. So all I can do on these live sessions for you guys is kind of just show you what I see, what I've learned, and how I use the quarter theory. But you may test it and you may use it in a slightly different way. You may wait for a break and retest before getting in. You may not trade consolidation. You might only trade with the trend. There's different things that you can play about with and kind of add to your trading plan to then decide what you want, how you want to use it. I like personally using it on consolidation levels. I do like equal highs and equal lows, because we know a lot of traders will trade equal highs and equal lows because they don't last forever. But what most people do when they trade equal highs and equal lows is they're expecting like a big move out, and that's where they want to make their money. I'm not interested in the big moves. All I'm interested in is the reactions from it going from there down to there, down to there, down to there. So the way that I personally do this, and what I'll show you now, is if you ever go on to this. Oh no, it's this one. Oh no, sorry, it's this one. So this is your typical consolidation level, like your consolidation happening. If only it was this clean, but just to give you an idea. If you're seeing that happening, that means that the banks are building liquidity, and eventually what's going to happen is they're going to take it from both sides, like you saw earlier. So they're going to collect liquidity on both parts, the top and bottom, before they move off, right? So this will generally go like that. Boom, they've taken that, and then we get that reversal, taken that, and then that's when they'll head right up, or they'll carry on going down depending on what they've done. What I like to do when I'm using these is I will kind of recognize that they're working in a consolidation area, and I'll try and get in on that consolidation area as early as possible. So we can see there's a reaction off of a level here, and it's come back down and it's reacted off of this level here. So this is the kind of point that I'll be looking to get in. If I miss this point, I'll be keeping an eye on this area to see if it creates an equal high. And if it does, then I'll be then looking to get in for the sell down here. And then at that point, I'm kind of done. I'm done at this point. I'm not really looking to take it any further, because it may go and take that liquidity, then it's going to potentially reverse on itself and take you out. So the point of doing this is kind of not to be greedy with it. With this type of trading, you've got a pretty tight stop loss, like I say, 5 to 10 pip stop loss, and you're averagely going for around 20 to 25 pips. So it's pretty good risk to reward, and there are quite a lot of trades depending on what currency pairs you look at. If you look at loads of currency pairs, obviously there's going to be more opportunity, but I only keep it to NZD USD, CAD JPY, and Euro USD. That's all I do. I don't really look at any other pairs. So I'm getting some questions here. I'll just go through them. What are you looking at those levels? Price action, candles, or specific setups? Yeah, so if there's price action, if you've got an order block that's sitting on sitting on a quarter theory level, which you get quite a lot. If you have this marked up, you'll get quite a lot of order blocks that will sit, or fair value gaps that will sit on quarter theory levels. So if that is there, that to me is an extra confirmation that there's going to be a potentially decent reversal on it. The reversal may not be big, it might only be a 1/4, or it could be 100 pips, we don't know. And this is the reason why I'm not massively greedy with it. I don't like to be in trades long, I like to be in and out. So yeah, it could be that, or I'm trading the consolidation and I'm just working in between a level. So that level could be a 25 pip area, or like we saw earlier, I think there was a consolidation level that was like 50 pips, and it was working nicely between the 50 pip level. Where is it? Yeah, this one here. So it's kind of just like, it's initially 25 pips, then it kind of comes down. That, I'm sure that would have reacted off of something. Let's have a look. Put that there. I'm sure if we go back, yeah, there you go. It's reacted off of an order block here. So you can see here, there's an order block. So there's all of these order blocks here have been hit. This one still hadn't been touched. So this was a free order block that hadn't come down far enough to tap into that. So prices eventually come down into that order block, reversed off of it on a quarter theory level, on a 50 level, and then we've had that nice pullback. So this is what I'm saying. Previous price action will always show you or give you an idea of what's going to happen in the future. So you always back test, and always, when you're looking at potential trade setups and you're looking at potential points of interest, you'll always look backwards for where it could potentially go in the future. What are you looking at for those levels? Are the green balls on the indicator high up for a sell and low down for a buy? Also, would you be doing an execution when placing trades? Yeah, so yeah, with this, you can set an alert if you want to. So what you can do is you can set an alert on the crossover, or you can set, I just wait for the green ball to appear, and then as soon as the green ball appears, if I'm happy with the movement, if I can see, like this scenario for instance, perfect, if I can see that price is really struggling to break through this quarter theory level like it is here, we can see that it's nipped up, but it's just not staying above it. And then we can see the ball. Ideally, you want the ball as high as possible on the range. It's no good if like the ball's near the median level, because it's technically kind of already made half its move. You want it as high as possible on the crossover where the Bollinger Band is. So this is actually like a really nice trade setup here, because you can see the reaction nicely off of the quarter theory level. The ball's really nice and high, and then we've had a nice nearly 50 pip move down. But to be fair, I would have let that break through, and I probably just would have taken it at that point. You would have been sitting a little bit, yeah, it's off 50. You probably would have got in that around 45 maybe. Yeah, 45, 46. And then yeah, you would have got a nice 20-25 pips out of that move, and that happened all within maybe an hour or two, and then you would have been done for the day or week, depending on kind of how large your account is and obviously what you're risking. And then yeah, and then it's just obviously the opposite way for doing it the opposite way. You're just waiting for a nice reaction. So you can see this is here, but I wouldn't have taken this trade, just simply because I like it to kind of nip the quarter theory level and kind of have a nice reaction off of that, or struggle to break through it before I get into it. You can see here that would have been a nice trade, but I wouldn't have taken it. It wouldn't have followed my rules. I want a clean kind of reaction off of this, and it's struggling to break through, because to me that's kind of, if you've got a strong support and resistance level, what's generally going to happen is price is either, if it's really struggling to break through it, what eventually it's going to do is absolutely smash through it, and you'll get like a massive candle that will just break through it and it will just go, or it will just slowly turn on itself and then it will just go down. So that kind of trade setup there's a really nice one. On the green ball, and yeah, oh yeah, like I said, you can do you can set alerts, so you can do it on the crossover, you can do it on the green ball. the thing is, the nice thing is, if you do it on a larger time frame, like the 15 or 30 minute, and you depending on where you keep your phone on you and stuff like that, you can obviously get alerts to your phone. There's no harm in kind of waiting for the green ball or setting an alert for the green ball and then just taking it out, having a quick look at it, and then getting in. It's not going to move a massive amount over a minute or so while you're looking at the trade. Obviously, if you're using the smaller time frame, like the 3 and 5 minute, then you need to be pretty quick, because obviously it's a lot more volatile at the lower minutes. I'm just checking this. That's cool. So yeah, if there's any issues with you guys getting the indicators, let us know. So you've been in ages, Cam. Have you ever used this? Did you ever use the quarter theory stuff? I don't know if Cam can talk.
Nah, mate. Like quarter theory, I still use quarter theory, yeah, but I never use the TQC. You still use that when you're trading, do you?
The TCQ or the TQI?
Whatever that is, TQI.
The TQI, yeah, sometimes I do. Yeah. A lot of the time though, you get kind of, if I'm doing this specific trading, then I will. But if I'm using the TCQ, the top one, for order blocks and stuff like that, then obviously I won't. But because to me, there's kind of like two different types of trading. There's the bankers supply and demand stuff, and then there's this. And I try not to mix the two if I can, because I generally hold, especially banker stuff, I'll hold that longer than I would do with the TQI. Like TQI, I'll just go quarter to quarter, whereas obviously bankers stuff is a lot longer than that. So
yeah, see, I just use the quarter theory indicator. I just flick it on and off, just an added confirmation.
Yeah, and loads do that, to be fair. And I think this was one of the reasons why I was getting kind of less and less on the sessions, because if you're using the TCQ, there's not really much to it. It's just, like you said, it's just an extra confirmation for what you're already doing. But for the ones that want to learn to use the TQI and only want to, like, maybe be in trades for less time and only want to trade those channels, those quarter theory channels, then it's kind of perfect.
Yeah, scalping.
Yeah, it is. Yeah, it's pretty much scalping. You're not in for very long. Sometimes if you get a nice engulfing candle like that, like that's a 15-minute candle, and that's smashed through 25 pips. So if you get one of those, yeah, you're in and out of a trade in 15 minutes, then yeah, you've made.
You want to get Jason to test it against his results for his scalping, see if any of it lines up.
Yeah, I could speak to him. I know some people have been using this against the SS2 indicator, with similar results, to be fair, but it's kind of it's difficult to use them both together because they both do different things. So it's probably not advised. You're just making
what's the SS2's moving averages, isn't it? What's this? This is Bollinger Bands and
this is Bollinger Bands and RSI and stuff. Yeah. So it's different. So it's going to give you on trades, because I did have a brief look on trades. One will get you in earlier on a trade and one will get you in later, but there's not. It's different with every trade. So it's like sometimes the TQI will be quicker and sometimes the SS2 will be quicker. So it's kind of using them together. You could use maybe one, you could use them aligning each other for general direction maybe, but that's probably all I would rely on them working together for, is general direction. If I know price is up here, I know there's a good potential that there's going to be a sell happening, and then you could look at the SS2, and if that's in a similar position where it's kind of in the overbought area, then you know then that there's potentially an opportunity for a sell as well. So you could then use. That's the only way really I think I would combine them together. I wouldn't. There isn't a strategy that I'd incorporate the two, because you're just. Like Matt's strategy is absolutely fine and it works lovely. So there's kind of no reason to make it harder than it needs to be. But you know, people like testing stuff, don't they? So
I was on the German 40 today, and I noticed that it reacted off those quarter. Every time it retraced, it reacted off the quarter line.
Mm-hmm.
So yeah, it definitely does.
What on German 40?
Yeah, on the 5 minute. Yeah, pretty sure it was a 5. Might have been 15.
Yeah. Like I said, price. There's always, you can see it there. You can see one there. It does work, but I just wouldn't. Oh yeah, like you can see the crossover there. That's on the 5 minute. The crossover there's coming in, and obviously it's worked its way up. That time though, it looks really flat. So I'd have to check what time that is, but yeah, you get like consolidation areas. But German 40 is going to move. The DAX is going to move really differently. So it's but a trending market's great. Like this here. Do you see what I mean? It's just like you've got that. You've got it there, and this is what I mean by price struggling to break through. So that's on the 5 minute, and you can see here how price has just really struggled to break through that level. And then what we've done is we've slowly turned on itself, and then you've just had that massive push up. That's a fair bit of profit there if you would have got in with that. But this is what I'm saying, you need to kind of add your current Forex knowledge and why the banks move to certain areas and stuff to then add to this, because you can't just go for every green ball, because it's not every green ball is relevant. You need to incorporate it with rules and other things for it to be more successful. And this is why I will have those rules in place. And this is why if you wanted to, you could have added the 930 and 62 EMA, and then you can wait for the crossover. And then what you're doing, similar to the SS2, is you're waiting for price to be underneath for a sell or above for a buy. But there's different things you can do to add to your trading plan. But if you guys haven't got a trading plan already, get one sorted, because a trading plan will help you massively. When we done our live training day in Birmingham a few months ago, Leon asked everyone who had trading plans, and there was about 3 people who put their hands up out of the whole group, which is quite scary. So you've got, sorry, pinned here just for you guys, this is Leon's trading plan here. And what you can do is you can obviously amend that onto Word, download it, and kind of do your bits. But this is what Leon follows, just to give you guys an idea. But you need a trading plan and have that next to you when you trade, and stick to those rules. If it does not follow your rules, you do not get in. And it's as simple as that. And also, yeah, like Stephen Price has done a trading plan. I won't open it, but talk to people about them. Ask in the group who's got trading plans, who hasn't, and see what people have done. Because I'm definitely finding the people that have done trading plans are the most successful, because it's given them something to look at when trading, rather than just, oh, that looks good, I'll get into that. They're not actually checking whether it's following what they should be doing. Cool. Okay. I'm just trying to think if there's anything else. Let me know once you guys have had a play on this. I'm going to be on again next Tuesday. I think Justin's got an operation on Friday, otherwise he would have been on. So me and him are going to be covering the quarter theory stuff, alongside, obviously, he's going to be doing newbie stuff as well. But if there is any newbie people on here and you need, and this is a bit mind-blowing for you, then just, you can ask any questions on this. So yeah, it doesn't always have to be quarter theory stuff. It could be anything. If you don't have a trading plan and journal, you're not taking it seriously enough for me. Yeah. It's very similar for you guys that, I don't know, fit boilers, run cables, fit bathrooms. You're not just going to do it off a whim. You're going to have a structure in place. You're going to have paperwork. You're going to have building shit in place to kind of make sure you can work with other tradesmen, to make sure you're not stepping on each other's toes or fucking stuff up. So it's no different to that. And yeah, trading plans are really important. Is there any questions before I go? There's a question there. One says, which pairs do you use for this again? I use CAD JPY. I love CAD JPY anyway. especially on the 1 minute. CAD JPY moves really nicely on the 1 minute. It always mitigates really nicely, but you can see reactions here, like straight away off of the 1 minute. It's just really, really nice. You can see here how we've got reaction there. So it struggled to get through there. And then straight away, as soon as I go onto it, look at this reaction here. It's just nipped it perfectly. And lo and behold, we've got a really nice trade there. And then we've had a really, and you see what I mean? It kind of just, and this is why you're not greedy with it, because you would have had a reaction there. And even though it has carried on going up, to me, I'm just like, I'm not looking for more than like a quarter, like a 25 pip move, 20-25 pip move, because I don't want the stress of worrying if it's going to go up to the next quarter theory level, which sometimes it doesn't, or most of the time it doesn't, because it will consolidate a lot. But from then 10:26 to 12:41, so you're looking just over 2 hours on a, like the stop loss on that, like your spread would be a little bit bigger. But even if you based it off of a 5 pip spread, which, yeah, to be fair, I don't think I'd even do a 5 pip spread on it. I think I'd have a pretty tight spread, maybe a 4 pip spread just to account for it. But that's 99. Let's move this up here. 97, 54 pips. Nearly 4 pips. You've gone up there. Yeah, you got like a 1 to 6 there, nearly a 1 to 7, and it's gone into like no drawdown whatsoever. It's just nipped it beautifully, and then we've just had a really nice reaction off. And that's kind of, and this is what that 1 to 6. If you would have risked 1% on that on a 100k account, that's $6,000 in the course of 2 hours. And that's you done for the week. There'd be really no reason for you to trade anymore that week. And this is the point of you guys getting your time back and kind of going part-time or doing whatever you want to do, staying full-time, but just going on nice holidays or whatever. But it's really powerful. It's a good strategy. CAD JPY moves really nice on quarter theory. It's not the quickest pair, and the spreads can be quite wide sometimes, but the way it mitigates into, and if you guys understand mitigation, if you've been in long enough, the way that price always pulls back into order blocks, it's just, yeah, I love it. And I trade this a lot on the 1 minute, because it just moves so nice. You can just see, yeah, it just pulls back all the time into order blocks, and it's just, yeah. And we can see that here it's just nipping quarter theory levels really, really nicely, and that's what I love about it. So this is why I would say probably CAD JPY is my favorite pair for this and just general trading. You'll always see, if I show my results, it's always generally CAD JPY. But cool. Okay. Which pairs do you use for this again? Would you trade off? Yeah, I traded the 1 minute a lot. I don't necessarily use the TQI a lot for I normally use order blocks and stuff, but I always, in all my trading, I'll use quarter theory. I'll always take notice of quarter theory levels, because that's like my bread and butter, the quarter theory stuff, because I love it and it's very powerful. But yeah, if I'm doing the 1 minute, generally what I'll do, and it's a little bit different, but I'll kind of wait for a mitigation area on like a larger time frame, and then I'd wait for generally a break of structure on a smaller time frame, and then I'd be looking then at the order blocks that are still outstanding before the drop, because what will happen a lot of the time is price will pull into those order blocks before carrying on going down. So I'll have a look and see if there's any left, and if there is, then that's kind of my point of interest for an entry, and I'll wait for price to pull up into them before going down. But cool. Okay. Cool. All right, guys, is there any final questions before I jump off? No, everyone good? Appreciate you guys coming on. Thank you. When you apply for the indicators, it won't take 24 hours for you to receive it, but give it 24 hours, and if not, then just open a ticket and one of us will jump on it straight away. But But yeah, otherwise, thank you guys for jumping on. It's nice to do these again. And yeah, send me some of your results as well. If you start doing this, it'll be nice to see how you guys are getting on with it. And yeah, I'll catch you guys next week, and I'm sure I'll chat to you at some point this week in the Discord.
Thanks, Sean.
Cool. Take it easy. See you later.